Hey YouTubers, welcome back to my channel. Today I thought it would be a great idea to dive into how much our hard-earned money will be worth in the near future and explore how the Bank of England could be helping to devalue our money. During the intro video, why not hit the subscribe button? But let's play a little game. I've got a coin and you need to guess heads or tails. And if I win, hit the like button, and if you win, hit the like button. So, the whole coronavirus pandemic has caused more problems than gossiping Asian aunties. Hit the like button and comment if you know about goodness gracious me. One of the reasons is due to the Bank of England, the UK's central bank, where it's promised to do something called quantitative easing in order to help the UK economy. But with anything that helps you these days, there seems to be always side effects. And in this case, the side effects can lead to inflation. So what is quantitative easing? Basically, it's when a central bank buys lots of financial assets to try and kickstart the economy. In order to really understand this term though, we need to also understand that when the Bank of England does something, it does affect the wider economy. Now, if you don't know already, the Bank of England controls how much money is actually produced, physically and digitally, and also plays a large role in determining the interest rates that the banks pay. Therefore, producing more money and lowering interest rates, which then leads to a very likely chance of inflation. Now, a little lesson on supply and demand. If there is scarcity of something, the value ends up becoming higher. For instance, if you had the coveted Michael Jordan game-worn autographed Nike Air Jordan 1s from 1985, right now you could be auctioning them with an expected return of $100,000 to $150,000. That's $150K for used trainers, as there's only one of these in the whole world. Now the same applies for money itself. If the Bank of England keeps printing more money and encouraging lenders to loan more money out, this means that there will be more Great British pounds lying around in the economy, which in turn makes them less valuable. Now, going back to quantitative easing, which, by the way, is not just a UK thing, but occurs anywhere in the world where there is a central bank. Essentially, if that bank can print money and set interest rates, it also has the ability to buy assets with the cash that it produces. So, as the Bank of England prints new money, it's also using that money to buy securities in the financial markets, such as gilts. Now, gilts are basically UK government bonds. So, how will this affect our economy? Well, when the Bank of England buys these government bonds, they're basically buying these bonds from investors who are already holding them. The whole idea is to inject a huge sum of money into the economy, but the money that the Bank of England gives to the companies selling the bonds is deposited into the banks. This then means that the banks have more money to lend to customers. However, the reason why businesses and individuals do not like loans is because of the interest rate. But thanks to the Bank of England, we have already gone and lowered the interest rates down to 0.1%, making it cheaper to borrow money, therefore enticing people to take out loans. So, if you haven't caught the drift yet, essentially this is all a big last-minute attempt to artificially keep the economy running with new money. Now, some economists have said that the quantitative easing that was done during the financial crisis of 2007 and 2008 was the cause of the sluggish growth that took place after that period. And they also confirmed that pumping all this money into the economy does actually lead to inflation. But on the other hand, there are others who say that the system provides a much needed boost to the economy by encouraging spending and boosting employment. Now both of them are right, but which has more of a lasting effect? Now, the 2007 crisis can't be compared to the crisis right now on a like-for-like basis, as just before the 2007 crash, the interest rates in the UK were at about 5%, whereas just before the corona crash, the interest rates were only at 0.25%, which means that the Bank of England was already operating at a low rate and decided to cut rates to an even lower rate. This makes economists wonder whether the cut in interest rates and the purchasing of gilts will have any significant impact on the UK economy. Also, due to the lockdown, any money that is actually being borrowed now is also unlikely to be used to make any major purchases, or at least until things begin to open up again. Now, generally, quantitative easing, quantitative. Now, generally, quantitative easing leads to inflation, which usually leads to the price of stocks also increasing as the value of money decreases. Now, when money becomes less valuable, this then means that we will need more of it to buy things. Also, when there are low interest rates, people don't want to have their money sitting in a bank. And quite frankly, it is probably the worst place to keep your money, as you are only getting an annual return of 0.1%, and then the rate of inflation is at 1%. So essentially, you'll be losing money. Therefore, people tend to put their money into the stock market. Now, when more and more people put their money into the stock market, it subsequently results in the prices of stocks to rise as well. Similarly, when companies know that they can borrow money at a lower rate, they will then be more inclined to take bets on new ventures. Now, we've looked at quantitative easing from both sides, and quite frankly, it's left us in a bit of a predicament, as it's pretty difficult to predict what will actually happen to the economy during all of this quantitative easing. But I think one safe bet is that we will only really have a good idea of what's coming next once we've fought the coronavirus. I hope you've learned a little bit about how central banks try to help the economy, but hopefully I've also been able to portray the other side of this coin. I'd love to hear your thoughts on the situation, so please leave a comment below. If you haven't already, don't forget to subscribe to the channel and make sure you click the bell button as well, so you don't miss out on when my next video will be out. Also, as always, if you liked the video, even if you didn't, make sure you hit the like button, share and comment. See you at the next video.